Be Wealthy and Smart, episode 721.
Step into a world of wealth and financial freedom without budgets, boredom, or bosses on Be Wealthy and Smart. And now, here's your host, Linda P. Jones.
Welcome to Be Wealthy and Smart. I'm Linda P. Jones, America's Wealth Mentor, empowering women and men worldwide to financial freedom. On today's show, we're going to talk about the best performing ETFs year to date. And these numbers are through April 30th and provided to us by Investors Business Daily. But before I do that, I just want to talk a little bit about the stock market. And is it disconnected from reality? Because we are still in the chasm. But actually, it makes a lot of sense why the market is disconnected from reality, which, yes, I do believe it is. And the reason it is because there aren't any numbers to connect to anything right now. So we're in Fantasyland, 100% Fantasyland. We don't know what the earnings are because we're coming out of an economy that was shut down due to a health situation, not an economic situation, a health situation, which has never been done before. So we had a complete shutdown of the entire planet, really, other than essential workers, and we don't know what the right numbers should be. We don't know what sales are actually going to be in travel. We don't know what the numbers are going to be for restaurants, for retail, for all kinds of businesses that were functioning normally prior to this, but have completely changed as a result of this. So we don't know what the correct numbers are because the revenue stopped. So the CEOs can't give any guidance. All of them basically are saying, we can't see a thing. We don't know what our numbers are going to be. And therefore, we are 100% disconnected from reality. We are in Fantasyland. And that's because we're still in the chasm. We only have, 31 states coming out of lockdown? So we still don't have the whole country open. The world still hasn't opened. And lots of foreign countries are in different phases of reopening or not reopening as well. So this is very fluid, and every day different news comes out. Is this state going to open or is it not going to open? New regulations come out about extensions for wearing face masks. All kinds of things are very fluid, very changing. We don't really have definite dates of when things are all going to be open. And I'm not saying that's a bad thing. I'm just saying that's the reality, and that's why we're in Fantasyland. Of course, for businesses trying to function and trying to open, it's a very big challenge for them. And some of them may not even reopen. Literally, certain businesses, restaurants in particular, have just decided they can't reopen. And so after 28 years in business, a very popular restaurant in Texas just had to shut their doors. This is the kind of thing that's unexpected, but understandable. So while we had this total shutdown and no one had any numbers to talk about from that time period, we still have businesses in different parts of reopening or not reopening, depending on what states they're in. And if they're a national chain, then they're all going to be impacted differently, depending on what state their franchise is in. For example, if they're a restaurant, they don't know. If they're in one state, they might be able to open. If they're in another state, they might not be able to open. So as a national chain, the CEO doesn't have a lot of visibility to say, here's what our numbers are going to be. And really, we're not going to get more of a handle on that until the country has been reopened and businesses have been at work for some period of time, and they're going to be able to give some kind of guidance and numbers. And then when they do, those numbers are not going to look very good because we know they're not going to be back to 100% what they were before. We know that they might have to do 1/3 or 1/4 of the business they used to For example, if they're a restaurant, they might have to work fewer tables, put them farther apart, etc. So the thing that will provide a lot of caution in the future is when we do get actual numbers, they're still going to be way below where we were, which means the stock market is going to want to go down again. So while we are in la la land now, and we might have a brief pullback, and we might even go on to some new highs in June, July timeframe. That wouldn't surprise me in the least. But once we start getting the numbers really coming in, the market will have to make a big adjustment. And I'm getting that to be probably sometime in late July or August, when the reality of how bad the numbers are is going to be shocking. And that's going to bring us back to reality as the market has to mark the price or mark the revenues back to the real market, which means lower. So the volatility we are going to see is going to be insane on the upside and on the downside. Just today, we were reminded that the Federal Reserve was going to be buying bond ETFs. So that means that the Federal Reserve is backstopping all of that debt. You see, in the end, the Federal Reserve is going to be like a big vacuum, and they're just going to vacuum up all of the debt, and it's all going to be contained right there. And then we're going to have to talk about making some adjustments to the currency and how to get rid of that debt. But that comes later, and that's mentioned in my forecast for 2020. If you haven't listened to my episode where I gave you that whole information and my future vision for what my stock market forecast is for the rest of the year, I recommend that you check that out. There's a lot of information in there, but it looks like everything is very much on target for exactly how I see this going down. It seems to be happening. So, yes, we are in Fantasyland. We may have a pullback. It might be a sharp, scary pullback. But from there, we're going to continue in Fantasyland, and the government's probably going to come out with more stimulus, and that is going to send the market higher as all these trillions of dollars are sloshing around out there and will find their way into the stock market. I do believe it's going to drive it to some craziness of a very high stock market before, unfortunately, we have to get back to reality. So these are crazy times. And it's not the typical buy and hold market that we've seen over my lifetime. It's not the typical buy and hold market where we've had a pullback and you can buy and pat yourself on the back and say, hey, I got in low and we're off to the races for the next 10 years. This one isn't going to work like that. This one is a complete reset of the global economy. And if you aren't recognizing that the economy is drastically changing, well, you're just not paying attention because it is drastically changing. So not only are we going to be more focused on basic needs and less focused on some higher end luxury things, but we're also going to see some of our basic needs, such as the cost of food, rise. So I do anticipate we will be seeing rising food costs. We will be seeing some breaks in the supply chain that are going to cause some issues with that. So it's a really good idea to stock up on some extra food in your pantry. Fill it up while you can and while prices are still low, because they will be going higher. And while this is a global reset, this does impact the world, this is really about currency and it's really about debt. And those are the differences and why this isn't the simple buy the dip investment opportunity like we've seen in the past. And it's also not a buy the dip real estate investment like we've seen in the past, because I do believe that we will see a leg down in real estate, and then we will see a sharper drop in real estate as we deleverage and get rid of all of the debt that is being created. You see, before you get rid of all the debt, you create massive amounts of debt. And that's what the debt creation is around all of these stimulus packages, around the new treasury bonds that are being issued by the U.S. Treasury, the bonds that have been issued by Boeing, the bonds that are being issued by different corporations right now, the massive debt that we see being issued eventually, I believe, is before we have a massive reset and wipe out all of the debt. But we'll get into that more as we get closer to that. I don't want to talk too much about it before we're actually there because it gets confusing. What's happening right now is another stimulus package for $3 trillion is being talked about in Congress. We have the Fed backstopping the bonds by buying bond ETFs. This is what's going on, and this is why we are completely in Fantasyland, because there's a lot going on behind the scenes. It's not just about stocks, it's really about debt and currency. All right, having said all that, let's talk about what has done well during this whole time horizon through April 30th. I'm just going to give you some of the top U.S. diversified stock ETFs, and we'll talk about sectors. We'll talk about some foreign stock ETFs. I'll give you the top 5 in several different categories. How's that? So the first category is U.S. diversified stock ETFs. The number one performing U.S. diversified stock ETF is Invesco QQQ, symbol QQQ. It's up 3.18% year to date. And second is the iShares Morningstar Large Cap Growth, symbol JKE, up 2.04% year to date. Motley Fool 100, symbol TMFC, up 1.16% year to date. The Vanguard Mega Cap Growth, symbol MGK, up 0.56% year to date. And the iShares Russell Top 200 Growth, symbol IWY, down 0.02% year to date. Also of note is the Vanguard Growth, which is number 7. That is down 0.77% year to date. The Vanguard Russell 1000 Growth, symbol VONG, down 1.41% year to date. And the Vanguard S&P 500 Growth, symbol VOOG, down 2.21% year to date. A lot of people do use Vanguard, so I just wanted to read out some of the Vanguard ETFs that were in there. The next area are sectors. The top performing sector year to date is the ARK Genomic Revolution, symbol ARKG, up 21.39% year to date. Number 2 is the ARK Next Generation Internet ETF, symbol ARKW, up 14.06% year to date. Number 3, the Sprott Gold Miners, symbol SGDM, up 13.76% year to date. Number 4, the iShares MSCI Global Gold Miners, symbol RING, up 13.21% year to date. And number 5 is the O-Shares Global Internet Giants, symbol OGIG, up 12.39% year to date. Also of note is one of our favorites, the VanEck Vectors Gold Miners, symbol GDX, up 10.18% year to date. In foreign stock ETFs, the number 1 performer year to date is Crane Shares MSCI All China Healthcare, symbol KURE, up 12.51% year to date. Number 2, the Crane Shares CSI China Internet, symbol KWEB, down 0.7% year to date. Number 3 is EMQQ Emerging Markets Intermittent and ECMRC, symbol EMQQ, down 1.05%. Number 4 is the Invesco China Technology, symbol CQQQ, down 1.43% year to date. And number 5 is the iShares MSCI China A, symbol CNYA, down 6.14% year to date. And the next category are commodities/currencies. Number 1 is the Wisdom Tree Bloomberg US Dollar Bullish, USDU, up 5.84% year to date. Number 2, the Invesco DB US Dollar Bullish, symbol UUP, up 3.16% year to date. Number 3, Invesco Currency Shares Japanese Yen, symbol FXY, up 1.01% year to date. The Invesco currency shares Euro currency, symbol FXE, down 2.6% year to date. And number 5, the Invesco DB US dollar bearish, UDN, down 2.75% year to date. So again, these are performance numbers just to give you some ideas and to help you think about asset allocation and how you might be diversified. Don't take it as investing advice. Always do your research. Just use this as a starting point. And remember that some of these sector funds are not broadly diversified. So you want to make sure that you understand the risk that entails before making any investment decisions. If you haven't already subscribed to Be Wealthy and Smart, hit the subscribe button and you'll be updated as soon as new podcasts are available. And I'd love to have you connect with me on Instagram at Linda P. Jones, on Twitter at Linda P. Jones, or on Facebook at Linda P. Jones fan page. That's all for today. Until next time, live the good life and be wealthy and smart.
Thank you for listening to Be Wealthy and Smart with Linda P. Jones. Share the wealth and tell your family and friends about the show. Check out our website, blog, and social media for more riches at www.bewealthyandsmart.com.